It's Trading Tip Tuesday. Still getting a lot of questions frequently about the cloud, so I wanted to go over how I add that to the chart on TradingView, how you change the settings, and the specific types of trades I'm looking for on the cloud. So open up your TradingView account. It can be a free account, unpaid account. This is available on CryptoWatch as well. It's available on other charting websites, Coinigy, wherever you chart, it should be available. It's a very old school indicator. It is simple, it's trend following, it's like moving averages, but not. It's very similar. So we just type in Ichimoku, and it's under TradingView, it's under the built-ins here. So you just click the cloud, it'll add it to the chart. Once you have it on the chart, you want to click this cog here, go to inputs, change this to 20, 60, 120, 30, if you want to use my settings. Now, this is a separate conversation because these are the settings I've used since 2017 or earlier. These are the settings I've determined for me works well and makes sense. If you prefer the default settings, that's fine. Doesn't matter to me. Whatever helps you trade is better for you. If you're confused on which to use, I would advise backtesting both and seeing which signals you like better, which signals you like taking at the time versus other signals, because this will adjust what you're looking at. It's kind of like looking at the 25-100 EMA cross versus the 50-200 EMA cross. For me and my trading style and what I do personally, I prefer fewer signals with higher conviction. So I prefer less noise. I prefer signals I don't have to think about, is this real, is this valid? I just go, right? I see it, I go. That's why I like those signals. Now, alternatively, you can think of these signals as a time frame in and of themselves. If 20, 60, 120, 30 is your baseline, then you can adjust that. You want to see the 12-hour instead of the daily cloud, adjust this to 10, 30, 60, 30. Displacement for me always stays at 30. That's how far ahead the cloud is, periods-wise, so 30 periods ahead. If it's the daily, it's 30 days ahead. If it's the 4-hour, it's 30 periods ahead. It's also the Chiku span displacement behind the cloud. So in this case, it would be, I don't have the Chiku span on. I don't use it too much, but you'll notice that this ghost line is 30 periods behind the price, and the cloud itself prints 30 periods ahead. So for me, I like that for crypto. For legacy or currency or whatever, Forex, oil, whatever you're doing, use whatever you want to use. We don't need to have the argument about which settings are better. If 5, 10, 15, 20 works better for you, then use it, right? I don't care. These are just settings that I use and find successful and make sense on backtesting. So that's how you add it, and that's how you change the settings. Now, for the specific names of these lines that I mention a lot on Twitter or wherever else, this blue line here is the Tenkin. The red line is the Kijun. This is the Chiku or lagging span, and this is cloud span A, span B. These have different names depending on if you know like the Japanese words for them, but those are the specific names. So these are the specific names and the specific letters you can apply, or you may see applied, you may see me apply, Tenkin, Kijun, lagging span. So when I'm talking about a TK cross, this is specifically down here what I'm talking about right here, TK cross, this specific thing. So if you want to backtest this stuff, you can use the replay button, or you can, if you know PineScript, you can do some backtesting. But just if you want to do your own visual backtesting, this is the setup you're looking for when you're looking for the perfect, I'm talking the perfect long entry signal, okay? Again, take a screenshot, put it in your portfolio or your image folder, and save this, because this is what you're looking for. Why is this perfect? Because you are waiting on 4 specific things. You're waiting for price to be above the cloud. Okay. Yes. Cloud is green. That means the cloud is flipped bullish. When the cloud is red, that's bearish. So cloud is flipped bullish. The TK cross is not yet crossed bullish. The fast is not over the slow yet. Fast being the 20, slow being the 60. You can think of it like that. And the lagging span, this ghost line, is above the cloud and above price. So that means the current price is above where it's been over the past 30 days, okay? And your entry signal is right there. right when that TK cross happens. Now, I don't care personally how the chart looks other than these 4 things when I'm looking for an entry signal. If it looks like this, for me, that's good enough. I don't care if the Kijun crosses over the Tenkin, if the Tenkin crosses over the Kijun. I don't really care if these are even in the cloud or out of the cloud. That is less relevant to me than the entire metrics as a whole. Above cloud, cloud bullish, TK cross bullish, lagging span, above price, above cloud. So this is the traditional entry signal you're looking for a long signal. The opposite is true. If you're looking for a short, below cloud, bearish TK cross, lagging span, below cloud, below price. So the sooner you understand the basic trade like that, you can apply it to anything forever and always. Using these settings, honestly, is fine, even for legacy, even for metals, even for Forex, whatever you're doing, this is good. And for me, these settings are valid, and these settings are better than whatever else anybody else is using. I keep reiterating that because I get a lot of questions about settings and why and what I'm doing with those. So again, this is the perfect setup. This is exactly what you want to look for, which is why you want to hunt this like a jaguar in the desert. Do jaguars live in the desert? I think they do. In the jungle. Jaguar in the jungle, hunting its prey. Okay, when you see this pre-TK cross setup, you are on high alert. You are ready at a moment's notice. You can even add alerts to this on TradingView. If you right click and hit add alert, you can say Ichimoku, crossing Ichimoku, and go from there. Okay, so if you want to set that up and set it and forget it on multiple charts, you're doing scanning or whatever. You can also see this on certain screeners on TradingView, for instance, or other screeners elsewhere. So this is the perfect ideal entry setup. That's the first type of trade. The second type of trade is the bullish TK recross above the cloud or below the cloud, bearish TK recross below the cloud if you're looking for a short. So again, if you're trading cloud on these settings, this is what you're looking for a long entry signal without the cloud flipping bullish bearish, because you'll notice TK cross flipped bearish, so you're actually out of this long position here, and you're waiting for your next entry, and your next entry is going to be right there where the TK cross flipped bullish again. Is this sometimes late? Is it usually not perfect? Yes to both. You'll notice the lagging span also went above price there. Does it make sense to solely use the cloud in these type of situations? Not necessarily. You have to have some knowledge of what's going on outside of just the cloud, because in consolidation you can watch other things besides the cloud. Obviously, you can watch stuff like this. In a consolidation, we almost always get some sort of triangle or triangle looking thing, right? And that matches up with this breakout, matches up with the bullish TK recross above the cloud. So depending on your size, risk, leverage, blah blah blah, you can start to add here and then just add more and more as it goes up. And these don't always work out amazingly, but that's not the point. The point is to know the signals and know what to do when they happen, because when they do cross, such as they did in October, then it can potentially lead to a multi-month rally like we're in now, right? So those are 2 types of trades. The first, the obvious, perfect setup, the unicorn, if you will. This is what you're looking for every time. Right here. The second type of trade is this bullish TK recross above the cloud, which on the daily hasn't really happened that often or ever. It's very rare that we see that on the daily for BTC or ETH. It's happened maybe 4 or 5 times for both. So it doesn't happen very often. These are strong continuation signals, the strongest type of signal other than the KOMO Breakout. So KOMO Breakout, TK recross, or TK cross above the cloud. Those are the types of things you're looking for. Those are 2 types of trades. The second type of, or the third type of trade you're looking for is what's called a Kijun bounce. So this red line, again, this Kijun line here, you're looking for price to mean revert at some level, right? So you have your bull run, you have your rally. We'll just replay it from here. We have our rally, right? And RSI is at 90, infinity, whatever, it doesn't matter. And the further this gets away from the Kijun, the higher the likelihood that it eventually tests it. The quicker the likelihood it eventually tests it. It says the market can only tolerate this deviation from the Kijun so much. It's only so great. in general, everything on the cloud wants to be thin, it wants to be close together, it wants to be tight. So when you see separations like this, you can think of them as a warning sign for reversal. And if you want like the perfect example of this, we can go to 2018 when we had this TKC clamp, as it's known, TK disequilibrium with a bullish divergence. So collectively, this is telling you, be careful being short here, be careful holding a short here, because this looks like it wants to mean revert back to the Kijun. Price always wants to return back to the Kijun. And sure enough, it takes time. It doesn't always happen the next day. You have to be patient with this stuff. These are high time frame signals that take time to play out. So if you're short from back here based on cloud signals, this is the first time the cloud is telling you to close that short. Down here, it was telling you, be careful holding that short because it's so far away from the Kijun with a bullish divergence. So that's the third type of trade, is the mean reversion trade to the Kijun. And you will see this over and over and over again, so much so that during a obvious bull market or bear market, I put bids and asks at these levels, leave them there, and move them up occasionally, periodically, as the Kijun moves. So even though we just tapped the Kijun on February 28th, I'll still have bids here, 40, I do right now, 43.5, wherever exchange you're trading. There will just always be bids there for me at all times. If we're in an obvious bull market, bull rally, multi-month rally, because those are the dips you want to buy. Those are the dips I will be buying. Those are the mean reversion dips that if the trend holds true, the trend is your friend until the end. You're buying all the dips, right? You could even be super aggressive and buy the Tenkan, right? Depending on, again, risk, size, leverage, tolerance, whatever. You can see how this will work until it doesn't, and then we test the next level down, right? And then the Tenkan becomes resistance until it doesn't, and then we break out. And then the Tenkan becomes support until it doesn't, and then we hit the Kijun. And then the Tenkan is resistance until we break out, right? And this is just a cycle that repeats over and over and over again. Ideally, in a perfect trend, I mean, this doesn't happen too often where you get this multi-month trend, which is another reason why we get comparisons to 2017 here. But so that's the third type of trade, the Kijun bounce. Bids or asks, just always there, and we can look at backtesting for the short side of that. 2018 is a good example of the mess that everything was. You can see how we popped into the cloud several times, and then eventually we tested the Kijun over and over and over again and just couldn't break out. Here's another great example of that Kijun bounce. You can see how far away price was at that time back here. This is a great example. When you're looking for pain and being oversold, look how far away percentage-wise this is from the Kijun. This says we've moved down way too fast on the daily, right? And expect a mean reversion. And again, it doesn't mean overnight. It means like a sliding scale, right? Adjust your expectations accordingly the further and further away this gets from the mean. And you can see how the 200-day moving average, if you're just curious how this looks on everything else comparatively, we got far away below it, but we didn't get, crazy far away. Percentage-wise, if you're looking for that type of mean reversion. We did end up testing the Kijun twice here, right? So they didn't really care where the 200 was at that point. This is me just trying to convince myself that the cloud is superior to all other indicators that'll ever be invented ever. Here's another Kijun bounce. So when you know this stuff, here's another TK recross above the cloud, right? When you know the basics here, another TK recross above the cloud. When you know the basics, you know what you're looking for and you know how to trade it, and you get excited when you see this stuff because it's so obvious, right? It's obvious on backtesting. There's no ambiguity as far as what to do. So those are the three types of trades. There's a fourth trade called edge-to-edge trade. One of the best happened here in 2019. Now, the edge-to-edge trade is a reversal trade. It is not a mean reversion trade. It's a reversal trade. And almost always you'll see some sort of pattern paired with this. This just says that when you see a thick cloud like this, price will want to move in the opposite direction of the current trend. So looking for a thick cloud, you're looking for price to be inside of the cloud. That's the first marker that this trade's going to work. The second marker is you want a confluent TK cross. So in this case, this is a bullish TK cross. It doesn't really care about the lagging span as much, but you can see how this reacted. Let's say you were expecting this edge-to-edge trade here, right? You see it like me, you get excited. You see this Adam and Eve setup if you know chart patterns. Adam Eve, you're like, okay, it's go time if we get past 4100. The edge to edge is there, but the TK cross is not bullish yet, right here, right? I'm specifically talking about this here. So this tries to break out here, sort of before the TK cross happens, even though all the conditions otherwise are set for the edge to edge move. And it continues to be the case. It doesn't really invalidate itself, it doesn't hold below this Kijun. That's the other thing. For these edge to edge moves, you want price to hold above or near the Kijun at all times. If this dips into the cloud, or dips below the cloud again, that trade is likely over. You can see we just hugged that Kijun for many, many days and then broke above. And I like scanning other markets. We can look at gold on the weekly and we can see the same trade setup, right? And this is why I was talking about this on my legacy videos that I do. You can see this 30 periods ahead of time. You see this coming, right? You see the flat cloud, and immediately I'm thinking to myself, this is an edge-to-edge setup. This was 6 months in advance, right? I'm thinking, okay, this is cooling off. First step, step one is a Kijun bounce. By the way, here's another example. Perfect in March, when everything sold off, Kijun bounce. Okay, you'll see this over and over and over again. I'm not trying to convince you, I'm just saying, just backtest it on everything you can think of, everything you like. Look at the daily charts. This is the weekly in this case, but you get your Kijun bounce, right? So when I see this with the cloud setup, doesn't matter what asset it is, doesn't matter what coin, I'm looking for this Kijun bounce first, right? That happens. Okay, cool. You can play that how you want to play that. You can play the long side on lower time frames. We get a second Kijun bounce attempt and then it just fails, right? And this should eventually travel to the bottom of the cloud, whatever that is, 16 something. So this helps inform me ahead of time. Be careful on the long side. Again, be careful holding longs up here. Get ready for a Kijun bounce. Get ready to sell that long off the bounce quickly if things don't look as bullish as I want them to be. This is all just helping inform you what's going on here. So again, we have 4 types of trades. I'll just pull up one last chart here on ETH on the daily. 4 types of trades. The first trade is a KOMO Breakout. This is the most vanilla type of trade. KOMO Breakout, price above cloud. You are waiting for everything to flip bullish. So you can see here the cloud is not bullish yet, but the TK crosses, price is above cloud. Lagging span is not above cloud yet. And you can see right there, the lagging span gets above cloud. So you can treat this again as your own sliding scale for entries. We can say, all right, we got our KOMO breakout here. I'm going to start opening a long position and adding to a long position, right? Because we don't know where this is going to go. This might just go to 0 tomorrow, but we don't know, right? So you get one part of the 4 parts criteria met. So we get our long entry signal there. Great. Let's add 10% of our account to a long position or whatever you're doing. Then we get the TK across. Let's add another 10% to the position or 25%, whatever you're doing for your own trading style. And then we're still holding this long. We're waiting. We're still waiting. We're waiting. Lagging span gets above price back here, right? That's the third piece of the puzzle is met. Now we're waiting on the cloud for our actual entry right here. And this is actually pre-breakout of this pattern here. On lower time frames, if you're watching this without the cloud, you're saying to yourself, okay, this looks like an inverted head and shoulders. It's messy. It's not perfect. You have to know some other stuff. There's a descending volume profile, sort of. It doesn't make sense that it's at the top of the price instead of the bottom. It's reversal or continuation instead of reversal. All that stuff, it doesn't matter, right? We're talking sliding scale here. How bullish are we? So we get this sliver of cloud. Boom. Don't even think about it. That's your entry signal. Where price goes after this doesn't matter. What matters is that the signals work and that you're ready to go. So this one, for days and days and days, just grinded that cloud level, right? Grind. And you're just watching it once a day, whenever the market closes, right? And boom, that's it. I want to be fully long on a position like this, on a setup like this, at this specific time. The lagging span goes back into the price, whatever. I care less about that. It quickly resolves itself and you get your answer, right? So I want to be fully long by then. So that's the first type of trade. Second type of trade is the bullish TK recross above the cloud right here. And we get that on ETH. Again, you can treat your long setups very similar here. We get that on ETH right there. And that's it. Everything's bullish, right? Bullish cloud, bullish TK cross, price above cloud, bullish lagging span. So that's the second type of trade. Third type of trade is the Kijun bounce, and we got that here and several times here. So you know the trend is okay health-wise if it bounces there, because that's the expected support. The expected support is always there. Bids in this case for the long side are always there. Price, if trend is healthy, it should always bounce there. That's the third type of trade. The fourth type of trade is the edge-to-edge trade. Let's see if I can find one. Actually, it hasn't been one on ETH, really, ever, on the daily. If we check ETH on the weekly, though, even higher time frame, we get this setup, which we were talking about. You know, I was actually probably talking about it back here, right? This all looked like it was a hot mess. Again, you're getting this TK cross recross below the cloud. So this would be your short entry signal here, short re-entry signal. Everything looks really dire here because you're getting a bearish continuation signal with price at multi-month lows, basically, or close to it. So we get all that, and this whole time I'm looking at this level up here, right? I'm looking at 760 the entire time. I'm just staring at this level on the weekly chart, and the expectation is that we reach for the other edge of the cloud. The expectation isn't necessarily that we just continue bearishly, right? Even though this could be a valid bearish entry signal on the weekly, if we get this big cloud that says we dropped quickly, we went sideways, and we should reverse. So here's your edge-to-edge trade the entire time, right? We saw this in BTC on the weekly as well. And once again, that setup rewards you for being patient, because if we look at back here, this is when the TK cross flipped bullish. So again, if you want to treat this as a sliding scale, if you are waiting for everything to align, you could open your long position right here. This was the first week. This was June 2020, the first week when price was inside of the cloud. That is your first signal that we're ready to go. Let's put 25% long right now. This is the first time in 2 years price has been in the cloud. This is an insanely incredible signal for the long side, okay? And you can see we're hugging that Kijun the entire time. We may go above or below it slightly, but we're still hugging it. And we're happy that we're long, and this is the first time we see the lagging span inside of the cloud with the TK across. So again, you're adding. This setup looks ready to go. And at this point, my expectation is two things. We're definitely going to hit 460, and we will most likely hit 760, sorry, the other edge of the cloud here. And sure enough, eventually, these things take tons of time, right? This is a 6-month trade window plus. So the first entry was in June, and it eventually hit the other edge of the cloud in basically January, late December. So I hope this is helpful. I'm going to post this around anytime someone asks me about anything. These are the 4 types of trades. These are what you want to look for. These are the settings. This is how you add it to TradingView. Let me know if you have any other questions in the comments below, and happy trading.